Ever wondered what you would do if you had the superpower of knowing what stocks other retail investors are buying today? So in this video, we'll be diving into the 13 most popular stocks that everyday investors just can't get enough of. So as the saying goes, what is popular is not always right. So should we jump on the bandwagon of these 13 stocks or dash in the other direction? Let's find out. So before we begin, you might wonder, why are we, the retail investors, called dumb money? I guess we don't really have any fanciful degrees, titles, and resources like the Wall Street pros to move the market. But don't be mistaken, normal investors indeed have the power to beat the market, as long as you have the right strategies to pick the right investment. That's it, let's get right to business. So the stock market has transformed tremendously in the last few years, driven by the internet and advancement in consumer technology. More people than ever are investing and trading stocks. And this trend was further sped up during the pandemic when everyone was locked at home. So this phenomenon was epitomized by the meme stock frenzy that we know of, where stocks like GameStop and AMC made headlines when retail investors banded together to give the middle finger to Wall Street through a short squeeze. So I think we can all agree that the retail investing crowd is playing an increasingly important role in the stock market today. Looking at what most retail investors are buying today helps us take a pulse of the market. And for this video, we'll be referencing an article published on Yahoo Finance, where they have essentially aggregated the list of most popular stocks using data from the Robinhood Index, Fintel, and Vendor Research to see what most people are trading day to day. Now, at number 13, it's the ticker symbol DJT. So it's ticker for Trump Media and Tech Group. So it's basically a media company owned by the former US President Donald Trump. And it became a public company back in March after a merger with a SPAC, which is a special purpose acquisition company. Currently, it houses the social media platform, Truth Social. And to not get into too much of the nitty-gritties, this is basically some sort of a meme company where traders are trading around the political news cycle and volatility rather than a long-term investment of any sort. So it has gone through huge volatility over the last 6 months. Year to date, it's up close to 80%, and its peak, they almost went 3 times in a short span of time. So I'm sure when this video is published, I'm not even sure where DJT is going to end up to. They'll probably be in a vastly different price point again. So I think us as retail investors can do much better than buying or even investing in Trump media. So if you're keen to discover hidden opportunities that are untapped in this raging bull market, join us in our upcoming mid-year live online event, where Adam Khoo will be sharing with you how he managed to beat the market over the last 5 years and what specific opportunities he's seeing in today's bull market. So tickets are free, spots are limited, so head down to the link below to secure a spot today. Alright, back to our list. Now, at number 12, it's GameStop. Come on, now I know why people like to call us dumb money. We can't seem to get enough of these meme stock and stocks with just extremely high volatility. So GameStop had made its mark back in 2021, where the retail community managed to engineer a squeeze so violent that GameStop actually rallied from $17.25 at the beginning of the month to over $500 per share. After the episode, the interest around GME had simmered down until this picture actually broke the internet again. So with Roaring Kitty, the OG of the GameStop saga, coming back into the picture in 2024. Interestingly, the management of GameStop had taken advantage of this volatility by constantly issuing shares and raising capital, beefing up their balance sheet to tide through these trying times ahead. Today, GameStop has roughly $2 billion on its balance sheet, which represents right around $11 per share. For now, anything above that $11 per share valuation is just some sort of a bet or speculation on the management team, hoping that they're able to turn the cash position into other further optionalities for them to transition the business to earn more profits in the future. At number 11, we have Marathon Digital Holdings, which is essentially a Bitcoin mining company. Intuitively, Mara stock has a strong correlation with the price of Bitcoin. But despite the strong rally of Bitcoin in 2024, Mara seems to be lagging behind. I guess if you're really interested in having Bitcoin exposure, another alternative is via a Bitcoin spot ETF. and hence Mara might be slowly losing its advantage, thereby not tracking the Bitcoin price movement as closely anymore. At number 10, we have Ford Motors. Ford, or any traditional car manufacturers for that matter, had seen immense competitive pressures coming from EV players like BYD and even Tesla over the last 3 years, as most consumers are transitioning to electric. When judging their business fundamentals, they've yet to prove to investors that they're worth our money, especially with declining margins, declining earnings growth, and flat or even negative growth rates. So from a fundamental standpoint, I would personally stay away from Ford. At number 9, we have Twilio. So Twilio is a cloud communications provider that helps business talk to their customers. And if you look at their price chart, they've risen to the top from $15 per share in 2016 to over $440 in 2021, delivering incredible growth rates, CAGR of 60% year on year from 2015 to 2021. Unfortunately, that frothy valuations set it up for a steep drop as its growth cooled off after the tightening conditions of the economy, coupled with intense competition. So from here on, Twilio must find new ways to grow again and put more thought into charting out their future. And at this current stage, it's not necessarily a very bright future for them. And number 8, it is of course the fan favorite, Tesla. So I think we don't need much introduction to Tesla and Elon Musk. So they are by far the world's largest electric vehicle manufacturer. They are probably the leading company with the most amount of optionalities to disrupt the world, built into the stock itself and valuations today. From full self-driving to energy to robotics, with many investors hopeful and optimistic about what Elon Musk can deliver. And 2024 was nothing short of eventful for Tesla, like any other year, of course. Weak sales due to the tough environment, Elon Musk's pay package being questioned, potential self-driving unveiling in August. For anyone hoping for a peaceful time investing into Tesla, you might want to look elsewhere. So from number 13 until number 8, Tesla is the closest that I would ever consider putting money in as an investment. Retail investors, we can definitely do better, man. Now, moving on to number 7, Disney. So this is interesting. I would have never thought a traditional company like Disney would catch the attention of retail investors, especially for many of us that like high volatility stock. So over the last 5 years, Disney was caught up in a myriad of challenges. They were first plagued with the pandemic, which caused a large part of their revenue from experiences to evaporate. Thereafter, they've also started to pivot into streaming with Disney Plus, which was met with huge competition. Leadership handover was messy. Nothing seems to be going right for Disney, and hence, it is also reflected in their share price too. And if I may speculate, I do think that many existing investors still value the level of IP, the value of brand recognition and heritage Disney commands today, and are riding out the volatility, hoping that Bob Iger is able to steer the Disney ship around again. You can say that it's a value investment or not, but it really ultimately depends on whether they're able to execute from here on. At number 6, we have AMD, Advanced Micro Devices. So if I may, I believe that the rise of popularity of AMD was partly triggered by the current AI and semiconductor focus of the entire stock market. And of course, with Nvidia, the king of semicon, being the center of attention for quite some months now, AMD, its closest competitor in the chip designing space, will inevitably rub off some of the excitement and magic. So as an investment, considering their business and fundamental performance, we still like Nvidia a lot more than AMD. Finally, we have reached the top 5. To no one's surprise, all 5 names are well known and popular. Heck, they even belong to this small subgroup called the Magnificent 7. So from 5th place to 1st place, Apple, Nvidia, Meta, Amazon, and Microsoft. Surprisingly, Google did not make the cut for being in the top 13 of the retail list. Like it or not, at least in 2024, the Magnificent 7, excluding Tesla, has pretty much carried the entire S&P index. So if you'd like to know how we look at the Mag 7 as a group, we have previously made a video outlining our entire thought process. The link to that video will be in the description below. Although it has been some time since that previous video, I think a majority of our analysis on these companies' fundamentals and moat still remain relevant. So tell us in the comments below, how many of the Mag 7 do you currently own? And armed with this new information of what retail investors are buying and even trading today, how are you positioning your portfolio? So will you add more to some of these names, or will you choose to look elsewhere? This is CK from Piranha Profit signing off. Till next time, keep winning.